recent spring meeting of the IMF and World Bank provided yet another occasion to assess the global economic strength and the risks to it. Earlier this month, IMF noted a further deceleration in global growth compared to its assessment in January 2019. Let's do a three-point analysis of the observations of the IMF meeting and what does that imply about global growth. 1. What are IMF's growth projections and the key concerns? IMF's global growth projection is 3.3% in 2019, a downgrade of 20 basis points. However, the projection for 2020 remains intact at 3.6%, implying a rebound next year. IMF also downgraded its growth outlook for the euro area to 1.3% in 2019 from 1.6%. Now, in its view, growth is expected to be weaker in several major European economies. In Germany and Italy, growth downgrade has been much sharper. Given this context, European Central Bank also keeps its interest rate policy on status quo, marked by liquidity measures like new long-term loan programs. However, ECB also remains hopeful for a rebound in economy later this year. Now, in case of China, surprisingly, there has been a slight upward revision in the IMF projections, implying growth could be stabilizing here post the recent stimulus programs. Among the geopolitical risks, Brexit remains a key factor to watch out for. While officially Brexit deadline had got postponed to 31st of October, UK Chancellor of the Exchequer, Philip Hammond, is hopeful that a Brexit deal should be struck between the UK government and the Labour Party within weeks from now. Similarly, for the US-China, deal announcement may take some more time, but media reports suggest that a mutually accommodative stance seems to be in play for now. For instance, US negotiators have agreed to soften their demand, asking China to curb industrial subsidies. 2. What are the key observations about central banks' independence? Well, the issue over central banks' independence was brought up as a key concern in the meeting. Now, Federal Reserve has also been under constant review on whether it is able to tackle political pressures from the White House. Now, US President Donald Trump is also making a case for his candidates Stephen Moore and Herman Cain into the board. ECB President Mario Draghi took a step further by mentioning that he is certainly worried about the central bank's independence, particularly in the most important jurisdiction in the world. In fact, in Eurozone this year marks an important transition for the incumbents of the central bank. 3 members of the ECB's board will complete their term, which includes Mario Draghi himself and Chief Economist Peter Praet. Now, further this year, 8 of the 19 Eurozone national central bank governors would also step down. 3. What are the key takeaways from the IMF and World Bank meet? And how will the central bank's board transition play out remains to be seen. Global focus remains on the growth deceleration and the ways by which central banks will mitigate that. So far, there has been a low possibility of recession and hopes on a rebound next year. Recent stimulus in China, easing geopolitical risks, and also the hope of easing in trade tensions will be definitely watched out for. Now, relative better economic momentum is expected for emerging markets versus the advanced economies, which could actually lead to further capital flows from here.